QuickBooks Pro Desktop 2021 tax line mapping export to tax software. That tax software being Lacerte, Lacerte being owned by Intuit, the owner of QuickBooks. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are on the desktop. We have our QuickBooks icon on the left. We have the Lacerte tax program icon on the right. Now, Lacerte is a tax program, and it's owned by Intuit, the owner of QuickBooks as well. So both these programs are owned by the same company, Intuit, and therefore it's a good program to be testing out with the transfer from the QuickBooks program using the tax mapping lines going directly into the tax program Lacerte, which is owned by Intuit. Now, Lacerte is kind of a more high-end type of tax program. Many CPA firms use Lacerte if they're doing multiple tax returns, and it's a good tax software. I've used it at different CPA firms in the past. Good tax software, but it's kind of expensive if you're just doing your own taxes. You might want to test it out also with TurboTax, which is the kind of software that you can do for your individual taxes. And so I haven't tested out TurboTax, but it's owned by Intuit as well, so therefore it might be another type of tax software to test. We may test it out in a future presentation, but this is what we're going to do now. So we've got our QuickBooks file. We've mapped everything on the QuickBooks file. We've entered the data to it. Now we're going to be exporting it to Lacerte. Now to do that, just remember in the lists dropdown in the chart of accounts, we have all of our accounts that were mapped out to a tax line item. If these chart of accounts was created when we started up the file, then they were already mapped because QuickBooks mapped them. In any new account we set up, we then mapped it to the proper tax line. So for example, if I was to edit this item, we're talking about the line item down here. And of course, this one happens not to be mapped because depreciation has a kind of a unique issue, and we'll take a look at that. But insurance, let's go to insurance, and we'll edit the insurance account. So let's edit the insurance, and we'll see that it's mapped down here to the Schedule C. So we're going to be exporting this to a sole proprietorship that would be reported on a Schedule C. Therefore, the tax line mappings will be on the Schedule C. Now, note we talked about some issues that were a little bit strange, including a home office. So we adjusted those for the home office deduction, the auto deduction. Also, depreciable assets is another one that's kind of a strange item because you need the tax software oftentimes to calculate the depreciation for the tax software. So that's another one that could be a little bit tricky when you do this exporting feature. In any case, let's go to the reports dropdown. We'll take a look at what happens here. We're going to go to the chart of accounts. Let's take a look at our profit and loss within the system. If I go to the profit and loss and change this, I'm going to do it for 2019 because that's the tax software I currently have available. So 01/01/19 to 12/31/19. Here's our data. So I'll give you this file if you want to test it out on your own. I'm going to be exporting this income statement, and the income statement is generally the stuff we need for the preparation of the Schedule C, because the Schedule C does not typically include the balance sheet, doesn't have a double entry accounting system on it on the tax return, but only generally includes the income statement. Now, I still like to do the double entry accounting system within either QuickBooks and or Excel to double check it. But just note, obviously, the tax return is just basically the income statement on kind of a tax basis for the recording of the taxes. If I go to the balance sheet then, reports drop down, company and financial, and we take a look at the balance sheet standard as of 12/31/19, there's what we have on the balance sheet. Again, this data is not going to be imported into the tax return, but it's useful to do it within QuickBooks because that double entry accounting system is what helps you to not have errors. One of the major controls to eliminate the errors of just data input. If you just compile an income statement, you're much more likely to have data input errors. So then we want to take a look at this in terms of a trial balance, which is basically the balance sheet on top of the income statement, and that's what will be exported to the tax software. So that would look like this: reports drop down, accounting and taxes. We would then look at the trial balance. So the trial balance would be from 01/01/19 to 12/31/19, and here's our trial balance. Basically, balance sheet on top of the income statement. This trial balance is what will be exported, and then the lines that are mapped on the trial balance are these income statement lines, because those are the ones that are going to tie out to the Schedule C, the ones that will be used for the tax preparation. But the entire trial balance will then be exported when we go through the exporting system. So note that most of the time, oftentimes CPA firms, if you're doing a full service kind of work on this, they would export the trial balance and then make their adjusting entries in some other software such as Excel. And that worksheet might look something like this, and then they would data input the tax information basically into the system. So that's one system that can be used. Now, if it's a small file, then it might just be that the tax preparation would take the profit and loss directly and just simply enter that into the Schedule C and not do anything external to this. But you're typically going to need some adjustments for taxes, including adjustments for the home office if you have the home office, depreciation auto if you're using a mileage method. So you could just kind of write those adjustments on the bottom of this worksheet, you know, on the bottom of the profit and loss, and say these are the adjustments for taxes. But then you don't use the double entry accounting system. It's nice if you put it into Excel, if there's a lot of adjustments at least, because then you can kind of use the double entry accounting system as you enter the adjustments. Okay, so now let's go to Lacerte. And I'm going to go to Lacerte, and I have my Schedule C basically set up here. I just called it a business, so I just added a Schedule C, and this is the data input. Nothing's in it now. I'm going to go to this trial balance here, and this is going to be importing the trial balance. This is where I can import the trial balance. Now, I've already done it in the past, so I have something here now. What I'm going to do is overwrite it, or hope to overwrite it at this point with the new file that we have. If you have not done this yet, then you will have nothing in this data input screen. So the way to import it then is to go to the import section, and I want to import it from QuickBooks. Now, note that I've tested out importing from Excel, not very useful most of the time, because when you export it from QuickBooks in terms of a trial balance, you don't have the tax mapping line, and that's the key point. That's why we set up all the tax mapping thing. So I would try to get everything lined up in QuickBooks as of on a book basis, and then just make your tax adjustments here as we talked about in the prior presentation. So I'm going to be importing this, and I'm going to say that I want this tax mapping file. So I'm going to actually find the file. Now, I have QuickBooks open, and they actually recommend doing that. If you do not have QuickBooks open to the file that you want to be exporting, it will then open up QuickBooks, and it'll then it'll export it. But they recommend actually to have it open. So if you actually have the file open, and then I go look at this file and try to pick it up, this file is already being used. It's a QBW file. It's already being used to run QuickBooks, and that's fine. So I'm going to pick up that same data. That actually allows the system to kind of give permission a little bit more easier as far as I can tell. So I'm going to double click on this item. I want this to be a Schedule C, not a Schedule F for farming, or E, that would be for rental. And so I'm going to say okay, because it's just a normal business. Takes a little bit of time for it to do the importing process. So then I get a dialog box over here in QuickBooks that's saying, do you want to allow the mapping in essence? And the application is requesting access to QuickBooks. This is the file. Access may include reading, modifying QuickBooks, and so on and so forth. The program is Lacerte. That's going to be the tax program. And then it says down here, do you want to allow this application to read and modify this company file? I'm going to say yes, because I want it to be able to read the file at least, right? Yes, prompt me each time. I tell it to tell me each time that we do this importing process, so I can, instead of having it do it automatically. So this one says yes whenever QuickBooks Company is open. I'm not going to do it that way. I want it to prompt me, yes, always allow access. So again, I'm just going to do this one up top. All right, so we're going to continue on that. And then you have chosen to grant application. That's correct. And so I'm going to say done. So we're looking now tax year 2019. That's the software I currently have, even though I exported it from 2021, QuickBooks software. I'm putting it into the 2019 Lacerte tax program because that's what I've got. So I'm going to go ahead and import it. You could use either the accrual method or import it on a cash method. I would think that you would want it the way it is in QuickBooks typically. So I'm going to take the accrual method. I'm going to say okay. So then we have the information. So it's given us a little recap. I'm just going to say okay. And notice it says 19 accounts remain unmapped. So that means they're not tied out to the tax return. 31 accounts mapped from QuickBooks mappings. That means they're tied out and to a line item on the return. So that's the time that has been saved with the data input. So let's say okay now. And it's rewritten this data. So this data should line up then to what is in QuickBooks here. Here's QuickBooks data. If I go to the profit and loss, I'm at the net income of 100. So that's the net income right now. So it's the book value net income is now lining up. That looks pretty good. So it looks like everything pulled in pretty well. Now note that I did hide some columns up top because we hid the book adjustments. So I could add the columns back in, by hitting this little add columns item down here and then go to the show columns. And if I wanted to do book adjustments, I would pick up these three again, which is there by default, and then say okay. So now we have our unadjusted books, the adjustments, and then the tax adjustments here, similar to our worksheet we looked at in this format, standard kind of adjusting worksheet, right? These are adjusting worksheet for adjusting entries, and then once we have the adjusting or the financial trial balance, we have our tax adjustments then, which is a similar worksheet to the adjusting entries, but taking it from the book value to the taxes. So then we have our journal entries that we can then be entering, and then we have our tax line. So this is where it's telling us that it's mapped out here. And look at everything's basically been mapped out for us. In other words, there's and then here's the red item. The red items are going to be the problem line items down below. So we have the problem line items here. Why are they problems? Because these are all the balance sheet accounts. They're not mapped anywhere. That's fine because it's a Schedule C business, and the balance sheet accounts aren't going to be mapped anywhere because they don't go anywhere. If it was a S corporation, they will be mapped. We'll take a look at that in the future. So these line items up top looks like they're going where they should be going, or they're mapped. So then if I go down below, you can see basically where the mapping is located. So if I go to office expenses here, I can click this item to see the mapping, and there it is down below. So we have the office expenses. This is our little data input screen. It gives us the relevant screens up top, and then you could show more of them if you want to see more data input fields, and then look at the data input fields, basically the data input side of things. So then you can close out of this up top. So you can check the mapping on all these items down below. Notice the depreciation isn't going somewhere, and we saw that depreciation was kind of a problem because oftentimes the depreciation is going to be calculated within the accounting system. So meaning it has to be calculated within the software. The software will typically calculate the depreciation, and then you want to be pulling the depreciation from the depreciation schedule. That's why it's kind of a problem to map it in. So if I map it in from an outside source, I'm kind of overriding it because I want to make sure it ties into the depreciation schedule that's coming from the tax software. So on these items, I'm going to go ahead and add them so I can line them up somewhere. The charitable contributions is not something typically deducted on the Schedule C. It's usually something that'll be deducted in some other location. So notice there's nothing in depreciation, so I guess I'll leave that as is. Charitable contributions, typically what I'll do is I'll add these in so that I can tie out on my tax return to what is on the books, and then I'll make an adjustment for it so that I know exactly what the adjustment is. So I would typically make a note of this, charitable contributions. I need to pull those out, but first I want to tie out to what's on the income statement, and then I'll pull them out typically. So I might map this some, and typically it would go into like other down here, other expenses. Now they won't let me add like another line item into the other expenses down here. They won't let me add one. So what I'll do is I'll go into the tax program, add that line item, and then I'm going to come back here. So I'll close this. I'm going to go into the typical data input field down here, and in the other expenses on down below, I'm going to add one, which is going to be charitable contributions. Again, this isn't something typically deducted here, but I'd like to add it, tie out, and then make an adjustment for it. So now I'm going to go back to the trial balance. I'm going to go down to that item and see if we can add it now. So, I went to the so it looks like it did it automatically now. It found the location. So there it is. I'm going to go ahead and check it out now. So now it's mapping to other expenses. And if I open that up, you can see now it's putting it into, so then it put it into that. So it found it now that I added that item. So I'm going to close this out. I'm going to close this out up top. Now also note we had those kind of issues with these, like the utilities, which was mapped to the home office. So it's not going to the Schedule C, but to the home office area rather than the Schedule C. We also had kind of an issue with this rent because it's going to the home office as well, but it's taking it to mortgage interest, and we would like to take it to another area. So I'm going to say miscellaneous. I'll tie it to there for now. And then let's go ahead and export this, and then we'll see what it looks like on the return. So I'm going to go ahead and post down here, post to the tax return. So select that item. It says then 19 accounts posted, 19 total items posted. I'm going to say OK. We'll close this out, go back to the tax return. And then if I go into income data input area and the Schedule C, we'll see what pulls in over here. And you'll see here's the gross income line item. And that should tie out. Now, if it's a black number, that means it came from the data input. If it's a blue number, say if I hit something blue in here, that means I physically manually inputted. So this is pulling in from somewhere. If it's black, it's drawing directly in from QuickBooks, which is nice because that can tell us what came from QuickBooks and what were our adjustments. So the income up top, we've got the 990, and then so the 990, and then the 10, and then the other income is the 20,000, and the returns and the allowances was the 10. The other income includes interest and dividends, so I'll keep that as is, although that might be investment income and possibly should be something that would be adjustment for a Schedule C, but we'll keep that there. Materials and supplies added to the cost of goods sold, advertising, bad debt, and so on and so forth. Everything's populated in and of itself on its own. So that looks pretty good. Note that some of it went to that home office deduction again. So we didn't include like some of the items that are here on the income statement because they're going to go to the home office, like the repairs and maintenance we put to the home office. That can kind of confuse things because then our net income on the QuickBooks will not tie out because we put some stuff to the home office. I like to see those types of adjustments in like Excel so that we can map out exactly what is in our system compared to what's in the tax software. But that's the way. So we might do a check on it in Excel. If I go to the forms then, see what it does on the forms here, and I go into the Schedule C. Let's go ahead and close this. And I go to the Schedule C, then we have this mapped out on the Schedule C. The income looks pretty good. Bottom line of this thing is the total expenses, the taxable or tentative profit is the 127. Notice that does not tie into what's on QuickBooks, which we have the 100,000 down here. And part of that is due to the fact that we have this home office deductions. And this is where the problem lies, because when you just import the data, you save a lot of data input time, but then you got to go back and say, okay, what did it do? You know, what's the difference? How come this doesn't tie out to the 100,000? And then you want to be able to explain the difference, which means if it's a complicated return, I would still put it into Excel so you can map out the difference. If it's not a complicated return, maybe you just print out the profit and loss and then write down the adjustments that are going to be included down below that are tax adjustments, difference between the tax return and the book value. So now I got to figure out, okay, what's the difference between that 127 and what we have in QuickBooks, and is it justifiable that Lacerte had made those adjustments? So also note down here that nothing pulled over for the business use of the home, so that form 8829, which usually pulls in right here, is not there. So let's go into the data input screen and see why those numbers didn't pull over. The rent and the utilities should have pulled over to that form 8829. So I'll go into the data input screen and see if it's enough just to turn it on. I'm just going to say, all right, I want this form go into the Schedule C, and so then and this is the data input for it down below. So it does have some information for the miscellaneous, which should be down here on the rent. So I'm gonna change that to 16,000. I think should go there. So I made that adjustment. That's why it's blue now. Repairs and maintenance. So that looks good. That's the stuff I wanted to pull in. Let's see if it now will generate it by just entering this one data point. I'm gonna say forms. Let's go back to the Schedule C. And we have the 8829 still not pulling over the 8829, and we're going to need a little bit more data here. Let's go through it. We need the business use area, so we need the square footage. We needed to tell it what kind of method to use, so we need the square footage. Let's say the total square footage of the place is 1,200 square feet of the whole place. 1,200, and we're going to say 500 is business area 500, and then total hours facility use. It's not a daycare. Let's just add that and see what happens here. If I pull it back over, then we have at least a calculation happening down here of the 10,418, and that's coming from the form, as we can see, 8829. So now we have form 8829 being generated. And this is the business use of the home that's mapping out. So we still had to put in, the square footage and tell it which method. There's a couple methods you could use, but this is the square footage method to get that ratio that it could then apply out to the items that we entered. In this case, just simply the rent and then the repairs and maintenance that it's applying that ratio to, pulling up down to the calculation of the 10,418. So what was in QuickBooks then was the 19, or was the 16 and the 9. but only part of it was a business expense, and we recognize that in the tax mapping in QuickBooks, and so only a portion of it, the $10,418, is going to be deductible on the Schedule C at least. So if we go back to the Schedule C, we have that item that's going to be down here. So now you'll see we're at this $1,116,582, which may well be correct, but it doesn't tie out to what's on the tax return here, because in part we have this 100,000. We have these home office deductions. So again, you're going to want to reconcile that difference somehow. You might just print this out and just write down the difference and show what it is. It's the home office deduction possibly. Or you might do it in Excel in a more formal way. So we'll actually export it, and I'll show you how I might do it in Excel. You might have, again, problems with the depreciation because you have the same kind of thing. This depreciation schedule, if we had any, would be recorded within the QuickBooks system. So if you overwrite it here, you would be overwriting what would be in there. The car and auto, the car expense is another area where you could have some problems because, again, you might be using the mileage method on the auto expense. So that's another difference that will often be taking place or could be happening here. And then we have those charitable deductions, which I should have probably removed as an adjusting entry, as not a business expense. And so, but maybe we'll do an adjustment for that to see what that will look like. So you can see it kind of saves times on the data input here, but you still got that reconciliation kind of problem that you need to do. So if you get everything lined up in QuickBooks and then export it, I think that's the best way to go. And then I would check it in whatever system you're using. I'm going to use Excel, and then you might want to enter the adjustments possibly into like the trial balance tab here. So if you had adjustments that you wanted to make, then you can enter them, in this area, which should then pull over directly into the data input. And so you can kind of do it in a similar way as we would do in like a normal kind of Excel type of format for our adjusting entries. So next time we'll take a little bit more of a look at that and see if we can make some adjustments. I'll export the trial balance to Excel and think about what that reconciling item will be from the tax return to Excel and how we can kind of reconcile to it in a more formal type of way using Excel.